Hello, this is Victor Santana with Stock Hunters video for July 5th for the end of month review of In the Market. Here we are looking at a chart, a monthly chart going back 2 years. Each candle is representing a month, and as you can see here on our candles here, this is the one where we left off right here, is continue to go down. We have the crossovers of the red and the green line, which is pretty bearish here, and we are having a red signal here. So definitely the market, at least for the longer term for now, is to be in cash for the overall markets. And let's go ahead and break this down to the individual indices, see what each one looks like. We're going to go to the Dow right now. As you can see with the Dow, we already got the crossover of the two lines indicating that we're in the bear camp, and along with our indicator here showing red continuing to go down. So with the Dow, I would stay out of the way and stay in cash for now until we get some kind of reversal signals here. Now let's go to the S&P 500. S&P 500 has continued to go down the last 3 months. We did get that crossover of the red and green line as well, and plus we are showing the red line for the indicator. So we may get a couple of bounces up and down, but the longer term trend is still down. So for investors, just stay in cash for now. Now let's go down to the Nasdaq. Nasdaq, as you can see, we've also gone down 2 straight months here. This is for July, so this is June here we're looking at. So the last 2 months, and we still got the indicator going down, pointing down red. So let's just stay out of the markets for now. And then the Russell's 2000 would normally lead the market here. We did get the crossover here going into this month here. This is July, this is June, and we're still continuing in July having lower lows, and the indicator is still showing a red line here. So in this area here, we also would recommend staying in cash. Let's go ahead and go to global. Global's been the weakest of them all. They kind of led the way down. We had the crossover back here in February. Did get a little rebound up here, but it couldn't sustain it, so it now dropped down here. This is for June, and then here's July, and as you can see, we've got the red signal all the way across, all the way since January, believe it or not. And then let's go ahead and take a look at oil, see how oil's doing. Oil's also showing a red line here. We did get the crossover, so oil is also looking pretty bearish in the long term here, so we'll stay away from the oil. And then let's look at gold. Everybody's talking about gold, and gold has been on an uptrend here. As you can see, we're still getting green line up here. However, more internal signals are showing that we might be getting a pullback, maybe a month or two. This is for this month here. Just July alone, how much has dropped compared to this month here. Actually, yeah, we'll keep that there. So if you have any gold, be considered going into cash. We may get a pullback, maybe down below this area here, 114, before we may consider going back in. But for now, it's best to lock any profits or stay on the sideline for the gold right now. So that's pretty much it for the month review here. Until next month, let's all be on the right side of the trend.